Hello and welcome to today's More Report Analysis videos on Wednesday the 8th of February with me, Rich Perry, market analyst at Handtech Markets. We've got again a fairly sort of neutralish looking market today. Not a great deal of direction on equity markets, not a great deal of direction on Forex. The only real interesting moves that we are seeing is on the euro. The dollar is mildly higher, and that is on the euro strength. Now that euro strength is coming on the back of the yield spreads that are pushing out on French versus German bunds. Now this is coming on the back of political uncertainty, political risk that needs to be factored in with the French election coming up on the rails really, and it is certainly pushing the yield spreads out. 76 basis points there. That is the highest, if I zoom out, highest since 2011 I believe. 2012, and it's at a level at which now the market is really beginning to factor this in, because certainly the euro is falling away. 36 ticks down on the day. It has been breaking down. I'll show you in my analysis video in a bit how the euro has deteriorated, or the outlook for the euro has deteriorated, but certainly this is sort of helping to support the dollar index. But the dollar index, is it going to be continuing to go higher in spite of the fact that the treasury yields are moving to the downside? This is sort of a reflection of safe haven assets that are in focus, preferred. Certainly gold pushing higher, and also the yen, which remains an FX outperformer below 112.50. Again, I'll show you that on my charted analysis later. But certainly there are some interesting moves that are being seen on these Forex charts at the moment. And it doesn't seem as though it's likely that that dollar outperformance is going to continue for too long, because it doesn't tend to move away from the treasuries for too long before the direction of treasuries start to take hold again in terms of directing the dollar. So watch out for that. But in terms of everything else, fairly neutral really today, nothing too significant. You've got no major economic announcements today until this afternoon, where you've got the EIA oil inventories, mild inventory build on crude stocks, distillates and gasoline. Now we had a quite significant inventory build yesterday on the API data, which helped to sort of pull the oil price quite sharply lower. Last couple of days oil price has been falling away back towards the lows of the range. 50 around 50 figure, maybe 50.70 is the support coming in on oil, so not too far away from where we are now, and I don't expect the range to be broken, so Matt perhaps would start to look for some support, but you expect some volatility there on the oil price today with the inventories from the EIA. And also we've got the RBNZ at 8 o'clock this evening UK time. Nothing expected in terms of movement on rates. 1.75 is the expectation. Where is it? Can't even see it. There is 1.75, although it doesn't give it on Reuters annoyingly. 1.75% is the expectation on that rates decision. But again, as with the Aussie, it'll be interesting to see how the outlook is going forward in terms of inflation and rates path. And the expectations from the RBNZ will be what drives the Kiwi tonight. So I wish you good luck in your trading. Here we go with the chart of the day, which is the dollar Swiss. Now dollar Swiss has been interesting because it's been trending lower. And trending lower to break down below 99.50. Now 99.50 has been a key level in recent days, but the market is turning up. Look at these momentum indicators. Breaking higher on the stochastics, crossing higher on the MACD lines and pulling higher on the RSI. That's broken the downtrend. Now the question is whether this is going to turn into consolidation or or a serious recovery. Now one spot 0044 is a reaction high within the downtrend. That is the first real reaction high that you need to think about. So a break above that would be a positive breakout for the dollar Swiss. So until you see that, you're sort of basically trading sideways, but you're trading sideways with a marginal sort of positive bias, because you can see here that 99.50 on the hourly chart again provided the support. So that old support, which became new resistance, is now being supportive again. Parity is obviously a level that the market is looking out for. It's been supportive previously and now is basis of resistance, but this 0044 is your key resistance. Now you're looking at the momentum indicators, you're more positively configured, with the RSI finding support on the hourly above 40, going towards 70 and above. MACD lines again turning higher, so it's all is with a positive bias, but not yet with a confirmed bullish outlook. So needs above 10044 to drive that move, and for now we're looking more positive, but needs that confirmation. So I wish you good luck in your trading today, and I will speak to you later. Thank you.